Today we're going to ask the question, what is a bond? A bond is a debt security that represents a loan made by an investor to a borrower, typically a government or a corporation. When an entity issues a bond, it essentially borrows money from investors in exchange for regular interest payments and the return of the principal amount at the bond's maturity. Bonds play a crucial role in the world of finance, providing a means for entities to raise capital and for investors to earn income and preserve capital. The bond market is vast and diverse, encompassing a range of issuers, maturities, and risk levels. Government-issued bonds are also known as sovereign bonds to fund public projects or manage fiscal deficits. Corporations issue corporate bonds to raise capital for expansion, operations, or debt refinancing. Municipalities may issue municipal bonds to finance infrastructure projects. Additionally, there are various types of bonds, including treasury bonds, municipal bonds, corporate bonds, and high-yield bonds, each with distinct risk and return characteristics. Bonds have two major components, the principal amount and the interest rate. The principal, or face value, represents the amount the bondholder will receive at maturity. The interest rate, also known as the coupon rate, determines the periodic interest payments that the bond issuer pays to the bondholder. The relationship between the bond's face value, interest rate, and market conditions influences the bond's price in the secondary market. Bond prices and interest rates have an inverse relationship. When interest rates rise, bond prices typically fall, and vice versa. This dynamic is crucial for investors to understand, as it affects the market value of their bond holdings. Investors often turn to bonds for income generation and capital preservation. While bonds generally provide a more stable source of income compared to stocks, they are not without risk. Factors such as interest rate movement, credit risk, and economic conditions can impact bond prices and returns. In conclusion, bonds represent a fundamental component of the global financial markets, offering investors a means to earn income and entities a way to raise capital. Understanding the intricacies of bonds, including their types, risks, and market dynamics, is essential for investors seeking to build a well-balanced and resilient investment portfolio. Please note, while we may discuss finance, investing, and money on this channel, this video should not be considered financial advice. When investing or making plans for your own financial security, please seek the guidance of a licensed professional capable of making more informed decisions. If you make a financial life decision based upon the content of this video or channel, then please do so at your own volition and at your own risk. This channel and the people associated with it should not be held liable for your investment choices. All the best, everybody.